Hello guys, welcome back to my channel. We are back with another video. So today we will have a detailed look about the 5 multi-bagger companies whose current price is somewhere below 50 rupees but who will give you a better return in the future. And every company in our list is going to be a fundamentally strong company. So let's start the video with the first company in our look. So the first company in our list is IRFC Ltd, which is Indian Railway Finance Corporations Limited. So the current price of the company is 33.25 rupees, whereas all-time high was around 37.40 rupees and the low was 22 rupees. In the last 1 year, the company has delivered more than 50% returns to its shareholders. So the company was incorporated in 1986 and the IRFC borrowed fund from the financial market to finance the acquisitions or creations of assets which are then leased out to the Indian Railways as finance lease. So this was the business model of this company. So now let's have a look on the fundamental key highlight of this company. So the market cap is around 43,500 crores. The stock P was around 6.78. The ROC, which is return on capital employed, is 5.32% and the earning per share is 4.85 rupees. The book value is 34 rupees and the ROE, which is return on equity, is 14.7% and the promoters holding is 86.4%. And just as a reminder, the dividend yield of the company was very good, which was around 5%, but over here it was around 2.4%. So this was the fundamental key highlight of this company. So now let's have a look on the pros and cons account of this company. So in pros, so the stock is trading almost at 0.94 times its book value. The company has delivered a good profit growth of 25% CAGR over the last 5 years, and the company has also seems a good healthy dividend payout of which was around 38%. So this was the pros of the company. So now let's have a look on the cons of this company. So the company has a low interest coverage ratio, the company's tax rate seems low, and the company might be capitalized the interest cost. So this was the pros and cons account of the first company in our list. So the second company in our list is Trident Ltd. So the current price of the company is 32.8 rupees. All-time high was around 43 rupees, whereas low was 25 rupees. In the last 1 year, the company has delivered almost negative 22% returns to its shareholders. So the company was incorporated in 1990 and the Trident Ltd actually manufactures, trades and sells yarn, terry towels and bedsheet and papers and chemicals. So this was the detail about this company. So now let's have a look on the fundamental key highlight of this company. So the market capitalization of this company is 16,700 crores. The stock P was around 38. The ROC, which is return on capital employed, is almost 12%. The EPS, which is earning per share, is 0.87 rupees. The book value is around 8.23 rupees and the ROE, which is return on equity, is 11%. So this was the fundamental key highlight of this company. So now let's have a look on the pros and cons account of this company. So in pros, the company has maintained a healthy dividend payout of 41.3% and the debtors day has improved from 26.5 days to almost 16 days, and the working capital requirement of the company has reduced from 72.6 days to 45.7 days. So this was the pros in our list, whereas in cons, the company has delivered a poor sales growth of almost around 6.8% over the last 5 years and the company might be capitalized the interest cost. So this was the pros and cons account of the second company in our list. So the third company is USK Ltd. So the current price of the company is 29.25 rupees. All-time high was around 35 rupees and the low was 27.3 rupees. In the last 1 year, the company has delivered negative 7.46% returns to its shareholders. So the company was incorporated in 2002. So the company is engaged in the business of the constructions of road, bridge and canals. So now let's have a look on the fundamental key highlight of this company. So the market cap of the company is 162 crores. The stock PE was around 10. The ROC was around 18.2%. The EPS, which is earning per share, is 3 rupees. The ROE, which is return on equity, is 15% and the promoters holding 65.9%. So now let's have a look on the pros and cons account of this company. So in pros, the debtors day has improved from 58 days to almost 38 days and the company's working capital requirement has reduced from 24 days to almost 16 days, whereas in cons, the company has a contingent liability of 55.4 crores. So this was the third company in our list. So the fourth company in our list is the Bank of Maharashtra Ltd. So the current price of the company is 32.75 rupees, whereas all-time high was around 36 rupees and the low was 18 rupees. In the last 1 year, the company has delivered almost positive 95.31% returns to its shareholders. So the company is engaged in providing banking services. The bank segments include treasury, corporate, wholesale banking and retail banking and other banking operations. So now let's have a look on the fundamental key highlight of this company. So the market cap of the company is 22,000 crores. The stock P was around 7.21. The ROC, which is return on capital employed, is 4.44%. EPS, which is earning per share, is 4.51 rupees, whereas the book value is 23 rupees and the ROE, which is return on equity, is 17.4%. So this was the fundamental key highlight of this company. So now let's have a look on the pros and cons account of this company. So in pros, The stock has provided a good dividend yield of 3.95%. The company has delivered a good profit growth of 34% CAGR over the last 5 years, and the company has maintained a healthy dividend payout of 20% over the last 5 years. Whereas in the cons, the company has a low interest coverage ratio. The company has delivered a poor sales growth of 7.46% over the last 5 years. The company has a low ROE, which is return on equity, of around 11% over the last 3 years, and the company has also a liability of 30,900 crores, and the company might be capitalized the interest cost. So this was the pros and cons account of the fourth company in our list. So the last company in our list is Easy Trip Planners Limited. So the current price of the company is 42 rupees, whereas all-time high was around 72 rupees and the low was 38.7 rupees. In the last 1 year, the company has delivered negative 15% returns to its shareholders. So the company offers a comprehensive range of travel-related products and services under the flagship brand named Easy My Tip. So this was the overall detail about this company. Company provides various type of travel solutions like airline ticketing, hotels and holiday packages, railway tickets, bus tickets and taxis, and many more are there. And company also help in the visa processing, travel insurance and many more platform as well. So now let's have a look on the fundamental key highlight of this company. So the market cap of the company is 7,300 crores. The stock P was around 50. The ROC was around 54.6%. The EPS, which is earning per share, is 0.84 rupees. The book value is 2.23 rupees, and the ROE, which is return on equity, is almost around 47%. So now let's have a look on the pros and cons account of this company. So in pros, the company is expected to give a good quarterly results. The company has delivered a good profit growth of 103% CAGR over the last 5 years, and the company has a good return on equity of the last 3 years, which was around 48.7%. So whereas in cons, the stock is almost trading 9 times its book value. The promoters holding has decreases over the last quarter by almost 3.6%, and the debtors day has increased from 98.5 days to almost 138 days, and the working capital days has increases from 43.6 days to 316 days. So this was the list of all the 5 companies who are listed in the stock market and who are trading under 50 rupees and can give you a multi-bagger returns in the next 10 years. So you can just pause the video. There are many companies as well, like Pradeep Phosphate, which we have not mentioned, like Ionex Green, which was also there. So this is the overall summary. So I hope you like the video, and just to remind you, this is not a bias or recommendation video. So do your own analysis before investing. So thank you so much for spending some time with us. We will back with another topic. Till then, bye and have a nice day. Bye bye.